This is Smart Investing with Mike Wren.
Securities and advisory service offered through KMS Financial Services.
This is Smart Investing with Michael J. Wren. With Michael's producer, Chris Martin. You can email us your questions. Go to smartinvestingshow.com to see how.
For I have the pride, the privilege, nay, the pleasure of introducing to you the one, the only.
This is Smart Investing with Mike Wren.
Hello there, everybody. You're back listening to another episode of The Smart Investing Show, where I'm Mike Wren, your host, and my producer extraordinaire, just like always, Mr. Chris Martin is across the table from me. This is the investment show where we try to take the topic of investing. Number one, we try to make it easier to understand. Number two, we try to get you good, relevant information on each and every show. And thirdly, we try to be entertaining. Sometimes that means a little cuss word here and there, but usually it just means that Chris is sharing some of his life experiences as selfie dad or, leader of the free world's troop of stormtroopers, stuff like that.
Yeah, just stuff like that.
Yeah. So, without further ado, Chris, do you have anything good for the good of the order that's humorous?
So last week was Lilac City Comic Con.
Yeah.
And I had an eyesore of a banner that my wife made fun of. It was 6 feet tall and about 3 feet wide, just filled with all the selfies that I've done. Just a complete eyesore of me. There was probably 30 images of just me on this banner.
She made it for you?
No, I had it. No, I did it all myself. So I had this standing right behind me at my table for Lilac City. And my table was also doubled for people signing up for the costume contest.
Sure.
So as this woman brings her daughter over, her daughter's signing the sheet and everything, and the woman looks up and she goes, "Oh, I remember that guy. He's so funny." And so I play along, "Yeah, he's hilarious, isn't he?" "Yes, he was so funny." And I go, "Did you see that one that he did there?" And I'm pointing at it, and I'm standing right beside a giant picture of me. "I remember that one. That was so funny. Did you see him on Steve Harvey?" I didn't. "Oh, yeah, he was on Steve Harvey." "Oh, that's so good for him." And finally the daughter gets all done signing everything, and she looks up and she's like, "Oh, you're that guy, selfie dad. How you doing?" And the mom didn't say anything. She just took her daughter's hand and they walked away.
Was the mom embarrassed, maybe?
I'm hoping so. So,
well, gosh, that must be when Alec Baldwin, gets called one of his brother's names or something like that.
I loved you in Firefly.
Yeah. Well, that's good. So along with the humorous nature of that, and that's a good segue with normal humans not having enough sense to see what's right in front of their face. Let's go with that.
That's generally the theme of every podcast that this is.
Oh, come on. It's not. It's every other one, right? Every other one. Every other one.
Let me tell you how dumb you've been.
No, it's let me tell you how dumb my
Part
industry
6.
is. Yeah. So sometimes I read an article. If you have been listening to these podcasts and also listen to us on the radio, by the way, this is one of those days where I wish that we were live on the air so any of these negative Nellies could call me up and tell me why they think things are bad and why I could cave their head in with a baseball bat of facts. Figuratively, yes. Yeah, so anyway, I happen to read Barron's article, and I like Barron's magazine typically. As always, it comes out on Saturday morning, Sunday morning, Monday. I get it a day or two earlier via the computer, and then I get it in, old school.
Bragger.
In old school. Well, that's why they would rather me read it on the internet so they don't have to print it on this paper. But on this paper, I can't write on the screen of my computer with exclamation points what I don't like about the article. I'd actually have to print it and do all of that. So it's
they fired me from my last job because I kept putting white out on the computer screen.
Yeah. So. I like it this way to where they provide the paper that I can mark up instead of me providing my own paper. So it happened to be an article that just incensed me. It is, let me get the facts here. It's the June 4th Barron's, 2018. If you don't have a subscription, it's a $5 fee to read the magazine for the week.
$5 a week?
Yeah. Mm-hmm.
Ooh.
Yeah.
They better have a lot to say.
Well, sometimes they do, and sometimes it's an article like this that it's good for getting my blood boiling. Yeah, well, you have to take it with a grain of salt. We're talking a nerd blood boiling here. It's not like some inflammatory thing like Hitler's coming back. We're talking nerd stuff.
Because that other article over there says "Bat Boy." It's going back. Is that?
Yeah, no, that's a different magazine underneath this one.
Okay.
So this article's on page 18, and it's written by a woman by the name of Reshma Kapadia, or Rishma Kapadia, or Kapadia, but I'm pretty sure it's Rishma Kapadia. Okay, so that's obviously her family's obviously first generation from somewhere, which is not a big deal. Okay.
How do you know it's a woman?
Oh, Reshma, I do.
Oh, okay.
Yeah, I'm familiar with the world's names of men and women. And I also searched.
Okay, as he talks to a person named Chris.
I know. I also searched this person.
Oh, okay.
Yeah. So, anyway, the article says that Retirement Rethink, and by the way, this is what they used for the cover of the magazine. And it says high stock and bond prices, more market volatility, rising inflation, and an uncertain economic outlook make retiring today a tougher calculation than ever before. Here's how to plan. By the way, if you are a client of mine and or anybody that's listening to this podcast, and if you have kids that are in the car while you're listening to it or in the room, I just want to tell you that this podcast might be more along the lines on the genre of some uncle that might cuss a little bit more, or some grandpa that was maybe in some sort of war that doesn't mind, cussing a little bit. That's going to happen today.
Okay.
And I'm going to try to make it minimal, but it's just kind of a preamble warning, I guess.
No, that's fine.
I think
because this isn't radio, so I'm not going to be bleeping anything. I don't have a 5-second delay on a podcast.
Now, did you mean bleeping, or was bleeping a euphemism for another word?
I'm not going to be bleeping your bleeps because I don't have bleeping time to bleep them.
Okay, so anyway, number one, what the hell do they mean about high stock and bond prices, more market volatility? That's just total bullshit that people in the world like to spew out of their pie holes to make you, the unsuspecting public, think that they know what the hell they're talking about, and they don't. So, I don't even get into the article and I'm pissed off, okay? That
it has been 30 seconds. I would have to bleep 4 things if it were on the radio.
Yeah. So anyway, I'm going to be referring to a lot of this article because in the end, it helped me get to a position that I know emotionally a lot of people in the world have a problem with, or most people. Well, maybe not in the world, let's just say in the U.S. And I'll jump right ahead to it. Imagine a teeter-totter. One side of the teeter-totter is the human just wanting a check a month forever when they retire. They don't want to have to worry about a lot. They would rather just play and get an allowance per month. They would rather have a pension. So that's one desire on the teeter-totter. The other desire, the other side of the teeter-totter is not as, I was unable to think clearly enough to make it as simple of a topic or as simple of anything. But the other side would say, I would like more money. But what happens if I give my money to like an insurance company that gives me that check for forever? I don't have my money anymore. So basically, one side of the teeter-totter is I just want to check per month and I don't want to have to think about it. The other side of the teeter-totter is I'm uncomfortable with everything, which means I have to think about it and I have to listen to everybody else. I need some advice. I need to do something different than just getting the check per month. That isn't an option for me. I don't have a pension, or I don't want to give all of my money away to an insurance company so they give me a lifetime and annuity. That's this teeter-totter that everybody's dealing with. That's kind of the crux of this article. It really is. And it's an emotional thing. And I think somebody within the term of talking about what they think their retirement might be within 15 or 20 minutes would be on each side of that teeter-totter several times. I get that. I understand that it's an entirely different proposition in your mind when you're thinking that you are probably gainfully employed now and you're making an income. For that income to stop is an earth-shattering event. It's when I'm talking to buddies, or I say the words, it's a butt-puckering event. There is a lot of security that comes to a person from, maybe being with the same company a long time or just having that paycheck coming in. That's a lot of security, because that's how we pay for things in life, is that money. And stopping that's uncomfortable. I think it's uncomfortable for everybody. The only group of people that I have found that aren't uncomfortable with that are typically folks that are in the blue collar arena of some sort. Or it doesn't really have to be blue collar, but it's typically somebody that is close to hating their job or fed up with it or bored for an extended period of time, number one. Let's say they hate it. Let's say, picture that movie Castaway with Tom Hanks when he's marking the days on the cave wall. That's what work is like for them. They are marking the days till they get off the island, okay? And when they get off the island, they're looking forward to a pension. They have computed their daily budget several 100,000 times over while they should actually be working. They have figured out what their pension's going to be. They're going to figure out what to get paid off. They're like the kid that has their first check that has every dollar accounted for. That's them. That's the only group of people that I've never seen go through any sort of emotional turmoil when they retire, because they flip and hate their job and they know that they're getting some sort of a monthly pension, and they are marking the days down until that switches.
What are they going to do? Fire me?
Yeah.
That's kind of, yeah.
So anyway,
I see that a lot at my work.
Okay. So anyway, that's the only section of the population that I see that doesn't have a problem with retirement and taking income and all that, because they hate their job, which is easy for them to leave, and they're looking forward to a pension, which is a monthly check for the rest of their life, which a lot of people don't get. So those two areas are fulfilled. A lot of people do like what they do, don't really want to leave it or leave it permanently. They'd like to do it less, maybe. They'd like it to be some transition, not just a quick cut. You know what I mean? Mm-hmm. Okay.
Yeah.
So back to this lovely article. It says right here, there's a quote, second paragraph. It's the worst time to retire since just before the dot-com bubble burst, says David Blanchett, head of retirement research for Morningstar, who must be an idiot. Okay? Second sentence, it's the downside of a decade-long bull market in stocks and a 35-year bull market in bonds, rising market volatility, rising inflation, rising interest rates, and an uncertain economic outlook all point to much lower expected returns, all of which is far more dangerous to a portfolio that is being drawn down than still accumulating. Of course, retiring just ahead of the financial crisis or dot-com bust was painful, but in both cases, the near-term outlook for the market returns was far better than it is today. Really? Far better than it is today. Chris, we were on the air during the financial crisis. How many people had a rosy outlook for the future then?
I think just us two.
Yeah.
I think that was about it.
So anyway, I forgot to actually, where do the quotation marks end? Okay. The Morningstar idiot was just talking, his first sentence, it's the worst time to retire since the dot-com bubble burst. That was his quote. All of that other dribble was by Reshma Kapadia, obviously a female that has her pants over her head, or is so stupid that she can't see what she just wrote, that literally wants me to throw up on her. Not on my own mouth, but on her. I mean, who in the hell says that when is ever the outlook known? Number one, the future's never known. Number two, it's an out-and-out lie. She must not even been alive back in 2008 and 2009. Everybody in the world thought the world was ending. They thought the world was ending. Chris and I were on the air. I was telling people, best buy opportunity in the world. People were giving us the middle finger. Literally.
I remember people were saying, what kind of gold should I buy?
Yeah, they're wanting to do everything in the world to commit financial suicide. Yet here we have Reshma Kapadia saying, oh, it was the market outlook was rosy back then. That's total bullshit, okay? It just is. It really, really pisses me off when you have some journalist that can barely wipe their own you-know-what, writing for a national magazine by Barron's, and some editor let this go by him or her. Why did that? I would have wadded it up and say, get it straight. This is misleading as hell, okay? It's completely negative. Completely negative. What way to inflame an aging population that doesn't need inflamed, okay? We already have an aging population that's so scared that when they're driving their Subarus down the South Hill and they see turkeys in the road, they stop. They stop.
You got to get over that.
Yeah, well, I'm not going to ever get over that.
No, I don't think.
Yeah, they stop. They stand on the brake. Okay, we have an aging population. How do I know? Well, number one, I'm looking in the mirror. Okay, I'm part of it. Number two, the types of commercials that you see on TV when I actually do watch broadcast TV. Oh, you can tell it's an aging population. Thirdly, look at how many Subarus are out there. Look at the drivers. Tell me how many of the drivers of the Subarus have gray hair. Enough said. And then articles like this, the talk of retirement. Talk of retirement is just as common now as talking about the weather. In fact, I wouldn't be surprised the news channels will start having not only a sports segment and a weather segment. I think they're going to probably start having a retirement segment because that's what everybody's doing. I mean, that's how quickly the population is aging pretty much worldwide. But back to this lovely article. So number one, this person is saying that things really suck now and it's really, really bad. And oh my God, it's horrible if you're thinking of retiring now. Don't even try almost, okay? Next paragraph, all this makes the current situation for recent and near retirees especially dicey, even for those who have massed a good nest egg. Here it says, retirement calculators often use historical average market returns, as much as 12% for stocks and 6% for bonds, but even the rosiest of optimists don't expect anything near that over the next decade. Okay, who are they talking to? Number one, why is the next decade supposed to suck so bad? Just because the last one was good? That's what I don't get. And here it says this Blanchett person, but the Blanchett idiot from Morningstar, expects stocks to return less than 4% and bonds just 2% over the next decade. Okay. There's several problems with that sentence. Number one, who anointed that a-hole God? Okay? Who is so full of themselves that they want to make a prediction not for the next 6 months, but for the next decade? You have to be certifiable. And you've got to be worse than that person. If you read that article and you even let that sentence go into your front part of your brain, you've immediately got to flush that out of you because it's absolutely... It's inherently wrong. It's a lie because nobody can tell the future. Number two, and this is a big thing that I'm going to jump away from the article right now a little bit. My industry and culture refer to stock returns, okay? I would like to know what in the hell they think stock returns are. My whole industry now has become hostage to these damn journalists. The journalists have been setting the battlefield and been setting the rules of engagement for 30 years, and now my industry is just some lapdog that just jumps every time that the journalists want us to jump. The journalists don't know a damn thing about investing. They cover the investment arena and they can be close to people that do investing for a living. But guess what? They're not in the actual operating room doing the operation, are they? They're just kind of reporting on it through the glass. They can't smell the open wound. They don't see the blood squirting around. They're not doing any of the work. Nobody's life is in their hands. They're holding, it used to be a pen and paper, and now it's probably some sort of computerized device that they're typing their crap on. So you've got these journalists setting the agenda. They don't know what an agenda is. Okay? When people talk about stock returns, I immediately go ballistic because my whole industry now, and Eugene Fama, the founder of modern portfolio theory, is a lot of the problem. They think that they've distilled it down that you're either invested in stocks or bonds. Number one, people don't know what that is. Number two, when you try explaining people what those things are, they immediately go back to the other side of the teeter-totter that says, I just want a monthly check. You've talked too much. I don't understand you. Get me on the other side of nah. They put their hands over their ears, and a grown-up, if they were a kid, that's what they'd be doing. You're not saying anything that I understand. I'm leaving the room.
I told you that in confidence. I feel that way about this podcast sometimes, so I know what those people feel like.
Thanks, Chris. I'm going to stab you in the thigh.
Anything you're saying.
I'm going to stab you in the leg with this pen.
I'm going to go get a coffee. You just keep talking.
So these folks, they never want to stick around and learn, or they never want to, explore. They don't want to be self-aware or aware of what the real facts are. My industry...
Well, because if they do, it's scary. Because they might learn something that they don't want to learn.
Well, it's actually, I think it's far from scary. It's where all the magic is as far as the future in the industry. Not knowing the future is pure magic. And not having set prices for wonderful companies, that's pure magic as well. It's just a really, really glorified version of garage sailing. You're going to garage sales where people are fed up with stuff, and maybe one of the things that they're fed up with might be just what you want. I'm not even talking about valuable. Maybe it's just something that you really want that you can't get anymore, like some old board game that they have. Something simple, something that you want. It has a value to you. Sometimes, you've seen it on Antiques Roadshow. You can get something at a garage sale that's quite valuable. So what I'm talking about is journalists in my industry, since everybody deals in packaged products now, mutual funds and ETFs and crap like that, they tend to start talking in these very general terms, like as if we were an airplane flying over the topic of investing. And it's like, no, those are stocks, those are bonds. I want to invest in stocks. I want to invest in bonds. I want to invest in stocks. I want to invest in bonds. Don't say that. Just be quiet. Don't say that. Don't read stuff that talks about that, because now everybody is in this airplane flying over the topic of investing. Nobody knows what's going on anymore. Guess what's going on? What do you do in a day? Do you go to McDonald's? Did you? Okay. Did you talk on your cell phone? Who did you buy your cell phone from? Who is your service with? Do you drive a car? Who made your car? Do you pay an electrical bill? Who do you pay your electrical bill to?
What did you buy to watch bad news all day?
Yeah. What did you buy at Walmart? Did you go to Walmart? Did you go to Costco? What did you buy at Costco? Guess what? Those are stocks. Okay? Those are businesses that you can invest in. It's not some term that the journalists use to describe somebody that's quote unquote aggressive about the future. And it's not some term that you could actually engender and say, oh, for the next decade, McDonald's is going, let's distill it down to what it really is. This person from Morningstar might as well have said, for the next decade, I think that insert company name here is going to make less earnings for the next decade. Really? You think people are going to talk on their cell phones less, genius? You think people are going to eat less hamburgers? Do you think, you think people are going to go to Costco and Walmart and Amazon less? Are you kidding me? That's what I mean, is that everybody's up above looking at some floor, but nobody's down on the floor scrubbing it, knowing how to clean it. Nobody knows how the floor became clean or how the floor became dirty because they're in some airplane all talking around and rubbing elbows with each other saying, aren't we great? Look at us. We read this article. We know what the hell's going on. It's like nobody knows anything anymore. When I tell people about investing, it's like owning a company. Most of the time, you could knock them over with a feather. And unfortunately, it's even worse when I'm talking to somebody in my own industry. In my own industry, they've lost the sight of fact that Wall Street is one of the major engines that made the whole world great, let alone the United States. It's an amazing engine that deals with companies, individual bonds, okay? Not these stupid packaged products that everybody now, that's all they talk about is this 30,000 foot level above everything. The world has lost sight of the fact that when you are an investor, and if you want to actually try to make money going forward over multiple years, you don't own a stock, you own a company. And you probably just don't own one company. It'd be cool if you owned a few because you'd be diversified. So anytime, it just drives me nuts that all these articles, my entire industry, they use this term stocks. But they've lost sight of the fact that it's actual businesses that you, the person listening to this podcast right now, spend your money with. That's your behavior. You can capitalize on your behavior and the behavior of others, and you can have some affinity. You can have this Reshma Kapadia tell you that the future is horrible. You could go through a 2008 and everybody in the world saying, oh, you shouldn't own that stock or whatever. Guess what? If you actually can say, well, it's not really a stock, it's a business, and I own shares of this company called McDonald's, and I'm in the drive-through right now, and there's 2 cars ahead of me, there's 2 cars to my right in the additional drive-through, and there's a car behind me. What's wrong with the picture? Nothing. Nothing's wrong with your picture. What's wrong is everybody reporting on the picture.
I think that you need to just stop there when you said the extra drive-through that McDonald's had to put in.
Yeah. I have good, Chris knows why, I have good, very good corporate information on McDonald's. When you have a McDonald's franchise, when you have a single drive-through, you top out, I think, somewhere around 12 to 1,400 cars a day at the busiest location. Maybe it's something closer to 800 to 1,200. That's about how many cars you can shove through one drive-through when you have people nodding at the speaker and minivans full of kids and people going, just wait a second. It's McDonald's.
I haven't read a menu in 30 years.
Yeah. Yeah, and can I get extra fries with that? Oh, yeah, let's make it a meal. Okay.
I'm so excited. This is my first time at McDonald's. And I've just pulled up in front of some guy who's very angry.
Weird. His name's Mike Wren.
He's slamming his steering wheel. That's okay.
With his head.
Do you guys have onion rings?
So, when you put that additional drive-through in, it more than doubles the return. And guess how much that additional drive-through lane costs most franchise owners? Like over $350,000.
Really? I was going to say almost nothing because all it is extra cement and another screen.
No, you would not. Let's just say you would not believe the data that McDonald's gathers on each car that goes through there. They have cameras that can read the license plates. They have sensors that can.
You're going to stop people from going to McDonald's.
They have sensors that can pick up the computer data from your car. People that have Bluetooth, you can pick up the Bluetooth and know who's in the car. the reason McDonald's has never asked you to have a shopping card like the Target card so they could track you, they don't need it.
See, yeah, now I just want to walk in. I don't want to drive anymore.
Now we've taken the show on a completely different tangent, which hopefully makes it easier to listen to without me just ranting and raving.
Sir, I can't understand what you're saying. I'm wearing tinfoil on my head, so you don't read my information. I just want fries.
Now, when you drive an old car like me, they can't get anything, so that's, there you go.
My car's probably that old.
Well, who would know? You only know the color, right?
Yeah. Yeah. I had to know more. I changed plugs the other day.
Yourself?
Myself. I went and bought them myself. And I was kind of embarrassed, I'll say it, when the woman in front of me who had a cheerleading shirt on knew more about her car than I did mine, that I'm 50. Yeah.
Did you gap the plugs before you put them in the motor?
No, not the plugs, the plugs that go on the plugs. You know, those black tubes.
Oh, my God.
The plugs.
You mean the wires?
See, I looked them up and it said plugs. That's what I asked the guy for.
Okay, if you're listening to this podcast.
Comes with 4 of them.
If you're listening to us right now, Chris is slaying me. This is not scripted. I remember I was having breakfast with my dad some weeks ago, and you came up, and I said, because my dad still has the service station, and he was saying that, somebody did this. And I said, yeah, it sounds like a person owns a car like, Chris, the producer, where they own a red one or a blue one.
Do you hear that noise? And you turn the radio up. What noise?
He's actually said that to people before. He says, your muffler's going out, so you can do a couple things. You can replace it. You can turn up your radio, or you can get better speakers.
Yeah.
Yeah.
That's pretty much. I didn't have a dad that taught me how to do auto stuff, so I kind of had to teach myself, and I am not a good teacher. So I went and I bought the little spark plug hats that go on, and
oh my. Well, did you do this?
Them.
Did you do this to the car that you drove here today?
Yes.
Okay, then you were successful.
2 weeks ago.
Oh, then you were incredibly successful.
But I'll tell you, I have no faith in me, so I kept the plugs that I was replacing just in case I screwed it up.
How far are you willing to drive that car now? Are you willing to drive it to Seattle?
Yeah, I do that.
Okay, well then you're obviously very, very confident in your work.
No, just dumb. And I have AAA.
Okay, this is what makes the podcast good. So let's take a break really quick. We're going to gather our thoughts. We'll be right back after just a moment.
This is Smart Investing with Michael J. Wren.
How about you're welcome? How about I'm so happy to be here for you all so I can take the blame?
Any opinions expressed herein are given in good faith and are subject to change without notice and are correct only on the stated date of issue. Past performance is not always indicative of future results. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Security, financial instruments, or strategies mentioned may not be suitable for all investors. Prices, values, or income from any investment mentioned in this report may fall against the interest of the investor, and the investor may get back less than the amount invested. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as a recommendation of particular securities, financial instruments, or strategies to you. Before acting on any recommendation on this material, you should consider whether it is suitable for your particular circumstances, and if necessary, seek professional advice.
You're listening to Michael Wren.
Maybe we should chug on over to Mamby-Pamby land, where maybe we can find some self-confidence for you, you jackwagon.
Okay, we're back. Thanks for letting us take that break there. I just had to collect my thoughts after Chris was giving us his, automotive maintenance advice.
I think it's a little early for you to be drinking, by the way. But that's
water, yeah. Water, yeah. So anyway, back to this article. It's problematic. Just about everything, in my opinion, that my industry spews about investing, I think is kind of off topic or wrong or off kilter, and especially the media. When you have CNBC, when they actually talk about companies, what's wrong there? Well, I'll tell you, it's minute by minute. Who cares? Who cares? If we're talking about Verizon, People are talking about their phones, and by the way, I'm using these companies, Verizon, McDonald's, Walmart, Costco. It's not solicitations to buy or sell. If you think so, you're more of an idiot than Chris is for changing his own plugs in his car. No, I'm just teasing you, Chris.
Or we welcome our new listeners.
So anyway, yeah, it's like, wow. They want to try to appear that all of this stuff, I won't use cuss words anymore.
Did you run out of them?
No, never. All of this stuff is important that they talk about. It's important, but it's from a different perspective. And I guess that's what I think that my industry has lost and the journalism profession has lost for the most part with all of the writing that they have to do about whatever it is they've lost the perspective. Most people, when they're thinking about investing, have lost the perspective that there's no guarantees. They've lost this perspective that while difficult, it does involve some optimistic view of the future. They've lost the perspective that my industry is telling you to own funds, target date funds, which is literally a mutual fund of other mutual funds, which means that you own thousands of bloody securities, stocks and bonds together. Thousands. Yet the people down the street that own the cleaners, that own the 7-Eleven, the franchisee owner that owns the McDonald's or the Domino's, the Domino's Pizzeria thing, those people, that's where almost all of their money is. Entirely different than my industry. All their eggs are in that basket. They're going to that basket every day, working it. My industry says, no, you can't do that. It's just too much risk. It wouldn't be responsible for us to tell you the truth. It would be responsible for us to feed you a line of bull so that we can sell you more crap. There you go. There is a happy medium. I know that you don't want to put all your money into one egg in one basket. Neither do I. I'm not in the mood. I also know that if you're gainfully employed someplace, you don't have time to take all the other money that you have in the world and work an additional job at some Domino's Pizza or McDonald's or whatever to be there all the rest of the time because you have a life, probably a family, and you also would need sleep. So it's physically and monetarily impossible for you to take the majority of your wealth and put it into one of those type of businesses. So what are we left with? We're left with something else. And I also get the feeling that people are starting to get tired of being sold shit from my industry. They're tired of the sales process. Yet they resist anything different than a sales process because that's what they're familiar with. Most people, when they're dealing with my industry, they're used to being sold something. When somebody like me doesn't give them a brochure, doesn't talk about any specific thing straight away, where we're just talking conceptually, some folks are very uncomfortable with that because they've never approached the topic like that before. So, back to the perspective and this article and so on. One other thing that jumps to mind is, believe it or not, Social Security. There is a little blurb in here on page 19 of this article that says, start with Social Security. It's hard to find consensus around retirement income strategies, but one piece of advice gets near unanimous support, except from Mike Wren. Delay taking Social Security until you're 70, even if you need to tap a taxable account to meet expenses in the meantime, says Margarita Cheng, head of Blue Ocean Global Wealth, whoever the hell that is. Social Security is guaranteed income for life, and the payouts are adjusted for inflation, which will probably rise in the near future. Yeah, the government is really well known for giving people large pay increases. Yeah, very well known.
Oh, yeah. About as much as them saving money.
Yeah. Yeah, and Basically, it's the people that say you for sure should delay taking your money till 70 because you'll get more. And you should for sure take money from your investment accounts instead of that because you'll make more. Well, yeah, if your investment accounts suck, I can tell, yeah, you might be thinking that way. But even taking out the feeling that, okay, your investment accounts suck, you are one of those people that isn't working with Mike Wren and you think of everything wrong, okay? Let's just say it's all wrong. There's one very, very important fact that they're forgetting, that when you delay payments, when you don't take your Social Security at 62 or 63 or 64 and you should wait till 70 to take it because you'll get more money, what about all that lost income that the government didn't have to pay you between being 63 or 64 and 70? Those 6 or 7 or 8 years where the government got to keep all of your money. In other words, when are you going to die? Are you going to live long enough after 70 to recoup that money that you didn't get from the scum-sucking government because you wanted to wait, because you were greedy all of a sudden? Oh, if I wait, I'm going to get more money. You not only have to wait, but you have to live several years past 70 for that math to work out, by the way. By the way. So all of my industry, yeah, everybody, it's consensus. Why can everybody come to consensus on a topic like that? Well, I'll tell you why. 2 reasons. Everybody can tell the future and nobody's going to die. That's 2 things that the human beings, when they're talking retirement in my industry, just like this article said, the next 10 years are going to suck, by the way, and you should wait to take your Social Security because you're going to live for frickin' ever. I mean, give me a break. Do you do the math? Think of how much income that you're losing from Social Security. How long do you have to live after 70 to make up the difference? It's going to be an eye-opening calculation to you. Because why? Because it's the truth. It's reality. You've got to live long enough to make that strategy pay off. And of course, nobody dies, so it'll always pay off. Well, that's the fallacy when you deal with people that have lost perspective, that are flying over the topic of investing and retirement income instead of dealing with it in the trenches, one-on-one, having people trust their livelihood to you. It becomes an entirely different kettle of fish. Anyway, that's what shall we call that? A Mad Mike podcast?
Yeah, Mad Mike.
Anyway, I hope that this podcast was informative. I hope that it was entertaining. At least the part with Chris talking is always entertaining. We'll be back again, same place, with another podcast of the Smart Investing Show. Thanks for listening.